Good evening, Mutisunge. Good to have you back.
Thank you, Wela. Good evening.
Right now, Mutisunge, the U.S. Federal Reserve Chairman Jerome Powell clearly didn't want to take the spotlight off the U.S. elections in his policy announcement yesterday by keeping the monetary policy steady and calling for more fiscal and monetary support in the wake of rising COVID-19 cases that are now clouding any positive outlook on the economy. Can you give us more details on his announcement?
Thank you, Yoela. So the FOMC, that's the Federal Open Market Committee, yes, did give that announcement, and it is very clear that they left rates unchanged. And one thing that really stands out is that there is need for further stimulus, especially coming from the fiscal side. This has not come through and has been delayed because of the Republicans. And why he still keeps the US election in the spotlight is because the Republicans who are more poised to take control of Senate are the ones that have been making this very difficult. While you have a Joe Biden on the Democrat side who seems to be leading for now. So the counting is still going, and whoever wins this election as well could actually spell what the future prospects for the United States are. That's why we see all that pricing into some of these commodity markets. I mean, are we going to get a person who's going to be in infrastructure spend that could actually push up demand for, base metals? So in a nutshell, what comes out of Jerome Powell's statement is that there is need for fiscal stimulus, but then he is also committed to monetary support, and they will continue to try and stimulate the United States economy that is then just getting out of that is growing fast, and there is rising COVID cases as well. So I think that's in a nutshell what came out of Jerome Powell's statement, and keeping the US election in the spotlight as well, because that has political risk factors that price into the markets as well.
Right now, on the global commodities market, we saw oil prices falling to $38 a barrel amid a surge in coronavirus and the lack of clarity from the US elections, as you've mentioned. Just what are the risks around rising COVID-19 cases in the global economy? And tell us more on how other markets have performed this week.
Thank you, Owela. So in the crude markets, yes, crude fairly had a good week, 6% up in terms of price, but then it gave up about 2% in losses. That was today. And you can see that US futures are right about 36, 37, while international ICE Brent was just shy of $40. That's $38, $39 a barrel. So what's actually weighing the crude prices is that there is fuel demand recovery. So the more COVID cases you have, the more impact it has on aggregate demand, the lower the demand for fuel. But then you have an OPEC plus member states that are ready to extend the supply, cuts that will provide support to the price of crude. So with falling crude prices, it should be very good news for net importers such as the likes of Zambia and countries that don't produce oil, because then at one end it means that fuel prices need to be edging down. But then it's very bad news for countries that are net exporters, because then it means that they won't be able to balance their budgets, and it's a problem. Other things that are happening in the markets is because of that uncertainty around the US, that's political risk factors. We've seen the Swiss franc at a 6-year high. We've seen the Japanese yen being demanded very high. These are two currencies that are demanded in times of uncertainty and the like. And then we've also seen that the stock markets in Europe as well were reacting to COVID as well. I mean, it's winter, and then COVID cases as well are pricing in. But then we saw a little bit of recovery in Frankfurt here and there. But at the same time, what's important is that the US has actually shown an increase in the number of employment cases. That's 638,000, which brings the unemployment rate to 6.9%. Yoela, 22 million jobs were lost because of COVID in the April period. But of that, only 12 million have been gained back. So you can actually see that the US is struggling with unemployment. But in terms of PMIs, we've seen an improvement in the US. You can actually see that there is that growth. But then with rising COVID cases, it could be reversing some of that improvement. But then at the end of the day, that is why whoever is going to win this election will have a mammoth task to then, grow the US out of this recession. Like China is doing fairly well. China is growing faster than expected. So I think in a nutshell, we see that. Lastly, in the base metal markets, copper and gold were rather stable. These are two barometers that are used in terms of uncertainty and growth prospects of the world, and then pricing in political risk. But we see that copper is still trading above 6,800, and gold is fairly bullish at 1,900. So in a nutshell, that's what the markets at the front line.
Yeah, right. Now, let's look at the local scene, Mutisunge. The prudential reporting by our banks for the quarter three showed that banks are indeed feeling the brunt of recessed economy activity going by the negative jaws and also reduced quarter-on-quarter earnings. Can you give us a high-level summary of banking industry performance?
So I think what really stands out is we look at the third quarter numbers. What really stands out is that costs are actually rising faster than revenues, and the jaws is one factor that measures the rate at which your costs are, rising compared to your revenues. So clearly we see a negative jaws. So costs were up 30.6% to about 6.25 billion kwacha, while revenues then jumped by a lower margin, that's 21%, to about 9.3 billion. And written all over these results is COVID. Increased COVID spend because banks had to spend a little bit of money on health protocols, ensuring their emergency response plans and they're equipped to, fight to continue providing services. And then we also see that there have been restructures. Other banks have been laying off people as they decide to go lean, and other branches are going digital and all that in itself. And then frauds and everything put together. The exchange rate has not been very good to banks because some of the services that they get, are priced in dollars. So it means if your exchange rate depreciates, you're going to have a greater cost. So the net impact of this is that profitability has actually tanked by 24% down compared to 44.5% in quarter two. And that is pretty much worrisome. I'll tell you, for credit impairments, credit impairments were right about 175% up to just under 1 billion kwacha, and it had sovereign risks all over it. But then the warning is that fourth quarter will not spare the banks because default risks are looming. If you do recall that Standard & Poor's has already, downgraded Zambia, and that will definitely have to be priced into the banking sector. So you can actually expect a bigger dive in profitability as well. So in a nutshell, I think that's what the third quarter performance, it's more COVID related. It's got COVID written all over it.
Right. Now, finally, Mutisunge, next week we have that date with bondholders on November 13th. But aside from that, what else should we look out for locally and globally in the coming week?
So, I just forgot to mention that there was a Treasury bill auction yesterday, and it was actually, they managed to raise about 1.6 billion, given demand for about 2 billion, and the yield curve was rather unchanged. You could actually see that about 1.4 of that was then housed in the 1 year, that's paying 24.5%. If we look at the currency markets, a bit of depreciation. The kwacha 20.6 crossed 21, mid-rate right about 20.8. You can actually see that FX risks are pretty much still of concern. I think something that we need to look forward to is the MPC on the 18th of November. This will be an interesting MPC in COVID period. Do we see rates remaining unchanged? Does the central bank have any latitude to create any more, demand and absorb any COVID-related shocks? This will be the new central bank governor's first MPC. These are things that everybody will be very keen on looking on. PMI results came out, and Zambia has slightly improved. It's the highest in 20 months, but still below 50. So we see it at 48.9. The biggest factor that weighed this PMI was the exchange rate. So the exchange rate depreciates. It means that input costs will then continue being a problem. But we expect that maybe closer to next month, we should be able to see anything closer to 50. And this will be the best that Zambia has performed in the last, maybe say 21 months. So in a nutshell, I think that's where we are. Bondholders, yes, we continue. We are all on the edge. Anxiety. I think there was a notice that came out to say bondholders are set to reject, Zambia's the vote and that solicitation request. I mean, look, Loela, there's been no other bank except for that China Development Bank that has come up to defer Zambia's debt. So the more banks we can get, we still remain cautiously optimistic. The more banks you can get, the more breathing space. But if we're not getting any banks coming through, then it becomes very tricky and we have to brace ourselves for the worst. So in a nutshell, that's that.
Right, Mutisunge, thank you for ringing the closing bell on our Money Watch this week. Do have a great weekend.
Thank you, Wella. You too. Thanks for hosting me on Spring 2014.